Hello, everyone. This is Lauren Steiner. Welcome to tonight's edition of The Robust Opposition. Tonight, I'm doing a show about a subject very near and dear to my heart, and that is fracking. And fracking is one of the first things that I activated against as an activist back in 2012 when I first heard what it was. It was horrifying to me. And even more horrifying was knowing that it was happening in my own backyard here in Los Angeles. We have the Inglewood oil field, which is the largest urban oil field in North America. And I soon learned of all the dangers of fracking, not just for the environment as far as polluting the water, polluting the air, increasing climate change, but also how it affects human health. And I've watched our fight against fracking grow and change from just addressing fracking itself to trying to ban all oil drilling. And in California and also Colorado, unfortunately, the measure just failed. The idea is to try to keep oil drills at least 2,500 feet away from homes, schools, and businesses, because any kind of oil drilling, and in California, the majority of what we do is not even fracking. It's acidization, cyclic steam injection, but even routine well maintenance can harm human health. So we're not going to be talking about so much the human health harms of fracking or the environmental harms, but we're going to be talking today about two subjects that I have not really covered in the past, and that is the economics of fracking. Is it even a profitable industry? And also this new industry that is coming up from fracking, which is based on the production of plastics. And we all, at least people of my generation who remember the film The Graduate, remember that famous line where Dustin Hoffman is at the cocktail party of his parents and somebody looks at him and he says, plastics. And that's exactly what's happened. Plastics has become a huge industry, and it is a petrochemical product after all. My guests tonight are Sharon Kelly and Justin Mikulka. Justin is a writer and video producer focused on issues of energy, climate, and the environment. For the past 5 years, he has worked for DeSmogBlog, where he has focused on issues like the dangers and regulatory failure regarding the movement of oil by rail and the financial failure of the fracking industry. Justin is finishing working on a book about the oil train issue and continues to investigate new issues and address them via writing and video. Justin has a civil and environmental engineering degree from Cornell University. Welcome to the show, Justin.
Thank you, Lauren. Great to be here.
Sharon Kelly is a Philadelphia-based attorney and freelance reporter who has reported for the New York Times, The Guardian, and The Nation, among others. She often writes about climate change for the online publication DeSmogBlog, where she is currently working on an investigative series covering the connection between petrochemicals, plastics, and fracking. She received her law degree at Temple University in Pennsylvania. How are you tonight, Sharon?
Doing well. Thank you for having us on.
Basically, I was fighting Obama during his entire presidency over fracking when most of the resistance were asleep because they thought that Obama could do no wrong. But in reality, he actually quadrupled fracking. And Justin's going to talk a little bit about that because you wrote an article in 2015 when Obama removed the 40-year ban on exporting oil. And I also noted that he wanted to also remove the 30-year ban on drilling in the Atlantic. He also drilled in the Arctic. I remember during George Bush, we all pressured him to not drill in the Arctic. But when Obama did it, none of the Democrats said anything. He had basically what was known as an all-of-the-above energy strategy, which also involved nuclear. And we licensed the first nuclear power plants in years under Obama's administration. He also pushed the Trans-Pacific Partnership, which would have exploded fracking because it expedited the permitting of LNG export terminals, liquefied natural gas. Because right now, if you frack for gas and you make excess, you can't trap it and store it and sell it, in pipelines You just have to flare it, which is bad because methane is 80 times more potent a greenhouse gas than carbon dioxide. So the LNG would turn it into a liquid product, and then with pipelines, you could take it to the coasts and export it. So before I do any more talking, because I can talk a lot about this myself, I want to go to my experts. And so, Justin, my first question is for you. He lifted the ban on oil exports. You predicted how this would expand fracking. Tell us how you were right.
Yeah, and just to follow up on your comments about the Obama administration and oil production, I've used a graph several times over the years where if you look at when Obama was elected in 2008, it directly correlates with when oil production in this country took off. Oil production had been declining since the 70s when we were producing 10 million barrels per day, and it really just started taking off due to hydraulic fracturing, known as fracking, right after Obama was elected. So the Republicans like to attack Obama about being anti-oil, but the truth is there's a huge increase in production while he was in office. But what had happened, because we were producing so much of this oil so quickly with fracking, it was very successful at getting oil out of the ground. It ran up against the hard limit that we have in this country of refineries. So we had more oil in the country than could be refined, which would have limited the fracking industry because they wouldn't have had a market to sell their oil because of the export ban. So the industry put on a real hard push to lift the ban, and the Obama administration could have vetoed it, but Congress went along. Obviously, they're all funded by the industry, and so it was obvious that the oil industry, the frackers, the commodities traders saw that they were going to be producing more oil via fracking than the American refineries could use, and they needed markets for that. And the markets were China and India, these fast-growing economies. Because if you look at it, America uses about 19 to 20 million barrels per day of oil. Back in 2015, China was using around 10 million barrels per day. The predictions for American oil use going forward are they're going to be flat or declining, whereas China, over the next few decades, predictions are they're going to go from 10 million barrels per day to 20 million barrels per day, like the U.S. So if you're an oil producer, you see them as the new customer. And so they needed to lift that export ban for a place to sell the oil that they knew they would be able to produce via fracking.
Yes. So that was one of the things, one of the myths that they said, that they were doing it also to help the consumer, and that gas prices would go lower. Did that actually happen?
Yeah, you have to give the oil industry credit for being great at PR, not necessarily honest, but they sold this idea of the lifting the export ban on several ideas that have proven to be false. It was clear that they were false at the time, but one was, I was watching all these congressional hearings, and you would have oil executives saying, we just want to do this to help lower gas prices and help the American consumer, which obviously is not in the oil industry's best interests, and they're not out to help the American consumer. Famously, the CEO of Exxon, one of the previous CEOs, said, I'm not an American company, and I don't make decisions about what's good for Americans. And yet here we had these oil companies, these international, essentially multinational companies, saying they wanted to lift the ban to lower oil prices or gas prices in America, which doesn't seem, it seems counterintuitive, but what they were saying is if we produce more oil, it will lower global oil prices, which will lower oil prices in America. What's happened is there's been this explosion of exports. America exported a record 2 million barrels per day of oil in June, which had ramped up over a 2-year process. And as we're hitting that record, oil price or gas prices for the American consumer also hit a multi-year high. So it hasn't proven the case to lower prices, gas prices, obviously. So that has been proven false. But one of the other arguments they were making was about national security, saying we don't want to be dependent on the volatile Middle East. You'll hear them use that phrase constantly for our oil, and we want to help our allies. In 2015, we still had a lot of allies in Europe, and they were saying they wanted to to move this oil to our allies to strengthen the American national security. So basically the argument was, if we export oil, it's not only going to lower gas prices for the American consumer, it's going to make America safer. The reason that's blatantly false is the people who make decisions about where the oil goes are commodity traders. Most of them are not based in the US, or many of them. And if there's one thing we know about Wall Street and commodity traders, they're not doing their jobs to make the world a better place. They're doing it however they can make the most money. So it was clear that what was going to happen was that we would be exporting to countries like China, who is not considered an ally, even though in congressional testimony, we had oil company CEOs like Harold Hamm assuring Congress under oath that we wouldn't be exporting oil to China. Meanwhile, until the last couple months, when this trade war with China has really ramped up, the top destination for U.S. oil exports has been China.
Actually, I did a show a few weeks ago about big ag and factory farming in the United States, and how, in fact, Chinese companies are taking over. They bought Smithfield Farms, which is the largest pork producer in the United States and maybe the world. So we know that we have Chinese buying real estate in all the major cities, and luxury real estate that nobody is living in, causing a real problem with affordable housing in this country. And now we have, you wrote in one of your articles about the Chinese, or that was Saudi Arabia owned a refinery. But we have all these countries that were supposedly trying to be independent from, but American corporations are totally interdependent, and they don't care about any of these geopolitical situations. They just care about making money. So can you talk about how some of the other countries are invested in this oil infrastructure, Justin?
Yeah, certainly. China, as you mentioned, are major investors in the U.S. in many industries, and oil and gas, and also in Canada. They have big stakes in the tar sands industry in Canada as well. So, and Sharon can talk in detail more about this, but they're also very interested in the U.S. petrochemical industry and investing there. So while we see China obviously trying to establish themselves as a global superpower and clearly not an ally of America, that they're, as you said, the corporations are looking for basically what the export ban did was allow oil traders to buy American oil and turn around and say who's the highest bidder on the global market. And they're not, they're selling to the highest bidder, and that has turned out to be China. But as you mentioned, another thing I don't think a lot of Americans understand is that we're especially with some of the issues with Saudi Arabia right now, that we import this year oftentimes less than 1 million barrels per day of oil from Saudi Arabia. We're exporting 2 million barrels per day of American oil. So we really are not. There's this myth that we are, as an economy, dependent on Saudi Arabian oil, while it's currently a fraction of the oil that America uses. And as you mentioned, the largest oil refinery in America is Motiva, and it is wholly owned by Saudi Arabia. So a lot of that oil that's coming into this country as imports of that 1 million barrels per day or so that is being imported from Saudi Arabia is the Saudis bringing it to their own refinery. Because Saudis can produce the oil so cheaply, they're bringing their own oil at the steep discount to the global markets into America, refining it. They own along with the refinery, they own a bunch of gas stations and retail distribution. So they're making huge profits refining Saudi oil in America and selling it to Americans. And so, it's clear that the national security arguments that are being made and the oil industry. I'm sure if you Google the volatile Middle East and oil exports, that's one of the things they talk about constantly. But it's really not. It's just not a valid argument right now. As the biggest, buyer of Saudi Arabian oil in America is Saudi Arabia for their Motiva refinery.
Yeah. Now, so this needs we should think about this in terms of what's going on in Yemen right now, because we are making a lot of money, or I should say American arms manufacturers and the defense industry is making a lot of money selling things to Saudi Arabia, even refueling their planes with, I don't know, their oil, our oil. And they are using that to bomb Yemen and cause the worst cholera epidemic, the worst famine, war, crimes, atrocities, the likes of which we've never seen. So it's really interesting what the propaganda that is spread to the American people versus the reality of what goes on. So now I want to talk about the economics of fracking, because about a year ago, I first learned that it's not even actually very profitable. And I want you to talk about why there is the steep decline rate. And you use a lot of terms in your articles, such as sweet spots, parent wells, child wells. Maybe you can make this accessible to the average viewer to talk about why fracking is only good in the beginning, and yet we're still doing it. We're going to talk about the economics and how Wall Street vulture capitalism is propping up fracking after we talk about, you know, this aspect.
Yeah, so the traditional oil production was you drill a hole in the ground, you look around for where oil starts gushing out of the ground, and so there was a big pool of liquid oil in the ground. And you would be producing a certain amount of oil the first year, and you might have produce a little less the next year. But those oil wells were very productive over a long period of time. While fracking is very successful at getting oil and gas out of the ground, decline rates can be as much as 80% in the first year. There have been in the Permian region, numbers are that high. So basically what that means is, say, if your well produced 100,000 barrels of oil the first year, the second year it produced 20,000. And the next year you're down to maybe 5,000. So what that means is you've invested all this capital up front, $10 million, or being a number for what it might cost to build and frack a well, and then you get most of the oil out of the ground in the first year. And so to continue as a fracking company, to continue to keep Wall Street happy, to show that you're producing more oil, you have to borrow more money to keep drilling more wells, because the wells if you just drilled a bunch of wells this year and didn't drill any more next year, you wouldn't have very much oil next year, and that doesn't look good to the people on Wall Street. So it's really a very capital intensive process. And before you had said the fracking industry hasn't been very profitable. I would say that the fracking industry for the first decade that it has existed has not been profitable at all. It has been a huge money loser across the board as an industry. They've borrowed incredible amounts of money from Wall Street, but most of these companies have never made money. There's approximately $250 billion of debt that they've borrowed over this decade that they have to now try to pay back. And because of these decline rates and other factors, it's highly unlikely they're going to be able to pay that back. So the industry as a whole has been a Wall Street financial engineering experiment. It's been great for Wall Street. They've made lots of money, just like they did off of the housing crisis. Yeah. But obviously that harms a lot of people, a lot of local economies, caused the Great Recession. And so we're looking at a similar thing here, where Wall Street is happy to keep lending the money, because that's how they make their money, to have the fracking industry continue to drill these new wells, even though the majority of the companies lose money year after year. They're producing more oil. We're producing record amounts of oil, just as the tar sands industry is in Canada. Both right now are losing money.
I read that the top 60 companies don't make enough cash to cover their operations. So talk about the different ways they're staying afloat. Let's talk about the role of debt financing. Let's talk about how the Federal Reserve basically enabled the fracking industry by keeping interest rates at zero. Talk about how the pension funds play into this, how private equity funds pay into this. I did a show a couple of weeks ago about Sears. And Sears was a company that went bankrupt. That actually was a company that was profitable, that sold things, that made money, that employed people. And basically, Wall Street vultures ruined that. Eddie Lambert and his hedge fund and his real estate company. And this is just what goes on in America. So talk about the vulture capitalists in the fracking industry and how they prop it up.
Yeah, so the industry hasn't, if you look at it logically, you'd say, well, why do these companies keep producing oil if they're losing money and have been for years? And so they're just, and why would you loan money to a company that's been losing money for years? But the Wall Street makes their money off of those loans. So, for instance, you see numbers like, I think at one point, there's a period of time Wall Street had loaned Chesapeake Energy $35 billion, or they bonded, sold bonds. The Wall Street people who arranged those deals cleared like $1.5 billion off of that. They made their money by loaning it, and so they're in good shape. Chesapeake, meanwhile, was not making money. So it's similar. Like I said, it's similar to the housing crisis. They're making money by moving money, and this is an area to do it. You mentioned the Fed and that also goes back to the housing crisis. What happened after the housing crisis was the Fed and the people in control of looking at the economy of America said, we have to keep mortgage rates low, or there won't be a housing market in America. So the Fed basically lowered the federal interest, or the Fed rate, to zero, which people within the industry were calling free money. Obviously, you and I couldn't go get a loan for 0%. But Wall Street has access to money at 0%. They need something to do with it, and so they were. The fracking industry was a great way to move money, produce oil, but also when they sell this debt, and people could get a higher rate of return if they were willing to invest in these companies, buy this debt. And so with the Fed rates being so low after the housing crisis and the Great Recession, in large investment companies, pension funds were looking for yield. And example I like to use was, if you have a savings account over the last several years after the Great Recession, you were getting like 0.1% on your savings, and which obviously is below the rate of inflation. So you're essentially losing money. These large pension funds, these large investors are looking at the same environment, saying we need ways to get a much higher return. If you're willing to invest in a risky junk bonds from the fracking industry, you could get these higher rates of return. So that's one of the things that drove this. Wall Street being willing to lend the money, or make these deals, and these large investors looking at ways in such a low interest rate environment, how could they get a higher return on their money? And so that's been all combined to allow this continue to move forward. And while these companies have been losing money, producing oil, no doubt, but losing money, as you said, earlier this year, the Wall Street Journal looked at the top 60 companies. Because this year, 2018, was supposed to be the year the industry finally started making money. That was the Wall Street headline in January. This will be the year the fracking industry really makes money. Then in May, they ran an article and said, yeah, we looked at the top 60 companies, and 3 of them made money. And they had examples where there were companies that were spending $3, investing $3 for every dollar worth of oil they were getting. I mean, that's just a losing proposition economically any way you look at it. But these companies, Wall Street continues to loan money to them. And it got to the point, in one of the articles in the Wall Street Journal, there was an oil company executive asking Wall Street to please rein in their financing of the industry. They said, because he was saying, please, you are the problem, because you're incentivizing us to keep producing oil, and that's what it was about, producing. It wasn't about whether you're making profits. It's like you have to, the incentive structure, especially for the CEOs. So even these companies that have been losing money, the CEOs of the fracking companies have done very well, because their pay has been linked to how much oil they produce, not the profits the company produces, which obviously, again, it just doesn't make sense on a business level. But yeah, there are a lot of very rich fracking executives and Wall Street executives. The companies, however, have not been profitable.
Okay, and let's talk about one of those guys who's not so lucky because he's dead. and that is Aubrey McClendon, who was the CEO of Chesapeake Energy, which was one of the largest natural gas producers. Talk about his suspicious death, because I thought that was an interesting story.
Yeah, Aubrey McClendon. The first person to really cover his story was Russell Gold. He is a Wall Street Journal reporter. He wrote a book called Boom about the fracking boom, and it was much more pro-industry slant than my writing. But he told the story. McClendon is a fascinating character. Comes from a family that had money. Went to Duke Business School. But by all accounts, was one of the greatest salesmen ever. He could talk you into buying anything. And he read a story about some young guy who discovered some oil and made a lot of money very quickly, and decided that he was going to go start an oil company. And so he and a partner they started buying up these land leases, and where they supposedly thought there was oil. And he was very successful. Built Chesapeake Energy into a massive company. But he did it by there's one of the examples is and they were raising tens of billions of dollars, telling global investors around the world that you cannot miss out on this opportunity. We have discovered all of this natural gas in America. We have discovered this new way of getting out of the ground, and both of these things were true. But whether they could make money on it or not wasn't true, because they have not yet. But so McClendon he built this empire, this Chesapeake, but got more into just flipping land. It really was more like flipping houses. He would buy leases and then sell them to other companies who would actually frack them. What happened to him? He eventually got pushed out of Chesapeake, and then just because he was a great salesman. And apparently was one of those people who just always needed more. He started a new company. People were willing to invest because of who he was and because he was a great salesman. And as he was building that company, he got accused he was indicted for rigging leases. And so essentially what the accusations were that he and some of these other big players who were going in and buying these leases were not paying fair market value to the people that they were leasing the land from. So it was bid rigging. It's illegal. And several days after that first indictment where he was accused, obviously he said he was innocent. He died in a single car accident where his SUV went at a high rate of speed into a concrete wall, showed no sign of braking. So it certainly had indications that it could have been a suicide. It hasn't been ruled a suicide by the police. They just say, the investigations say he certainly had the opportunity to brake or try to avoid the concrete abutment he ran into. He did not. So, he was in trouble. He was deeply in debt. He had been a multi-billionaire. I mean, he owned an NBA basketball franchise. He owned, very successful, but he's a great example of the fracking industry in itself, where they sold this great idea. But in the end, the money wasn't there, and it did not end well for McClendon, and it's not ending well for the industry.
We need to move on to Sharon's portion of the show, but I just want to end this segment with a note of hope because it all seems so hopeless. But you have been writing articles about the tar sands and how that is an industry that is in decline, and a lot of people watching have probably protested a lot of the pipelines, the Keystone Pipeline and the other pipelines, Dakota Access Pipeline, that are bringing this dirty tar sands oil in from Canada. And you're writing that it's on the decline. Can you tell us really briefly about that?
Yeah, so Canada is facing a similar situation to the U.S. fracking industry, producing record amounts of oil, but right now, it's an established fact that they're losing money on every barrel of oil they produce. One, because of the low quality of the oil when there is this higher quality fracked oil available in America. Two, because they don't have these pipelines to get it to coastal ports to export to places like China. So, and another factor that's hurting the fracking industry as well is that now you have these refiners who are pitting American fracking industry against the Canadians, because the Canadians are selling their oil so cheaply that it's a buyer's market if you're a refiner. And so that's another negative for the American frackers is If you're a refiner in America, you can turn to Canada and pay them less. They're selling it to you at a loss. So both these industries are financially make no sense. So just like the U.S. housing market was propped up on financial engineering and made no sense, it went on for much longer than a lot of people thought before it crashed. But both the fracking industry and the Canadian tar sands industry don't have sustainable business models, are losing large amounts of money right now. And so it can't continue forever.
Okay, great update on that situation.